All right, traders, it is time to prepare to trade the best setups at the best prices. This is going to be the most important lesson that I go over this week as we are approaching a key critical level on the SPY. We're going to be breaking down where the bull and bear traps are going to be created. I'm telling you guys, we're going to be getting into the money-making levels, and I'm going to show you how to determine whether it's bullish or bearish. I'm going to be teaching you guys step by step some strategy, some analysis, along with the key level update. Let's get straight into it. So we have a very volatile week ahead. And what I need you to understand is in terms of the SPY, it is in the process of filling a gap. So write that down. SPY is in the process of filling a gap. Right now, it's sitting at the middle of a price channel, right? So we're in the direct middle, and there's a gap that's going to be in the middle. So let's go over this. So we're going to have a new gap to fill on the SPY at $410.84. This is what we're going to call our make or break middle. Why is this so important? We'll take a look. You can see right here, SPY topped out at 411, and it ended up being a major bull trap and sold off all the way down to 404. And you could see right here, SPY ended up breaking above 411, then it ended up being a major bear trap and quickly ran all the way to 417.60. So the point I'm making here is this 410.84 level is going to be a new gap that is sitting in the middle. And it is our job to determine and to confirm if it's reacting bullish as support. Therefore, it's going to start to explode up to try to fill the higher gap at 415.51. You have a gap to fill there. Or is it breaking down and reacting bearish and forming a resistance level? If so, then it's going to start to break down to fill this gap at 404.36. So what I need you to understand is in terms of where we are in the market, we are in the middle of the channel. The middle is going to be 410.84. The top is going to be 415.51. And the bottom is going to be 404.36. So in terms of your best price for call options, obviously $404.36. In terms of your best price for put options to short, $415.51. Now, if you hit calls at 404, I wouldn't risk below 403. Now, if you hit puts at 415 and you get stopped out at 416, 417s, I would personally try again at this gap right here. There's a gap to fill right here with major resistance on the SPY at $419. You can visually see right here, we have a gap to fill on the SPY at $419.99. Let me go to the right page here so you guys can see this clearly right here. This is the one I was referring to. This gap towards, let's see, 1 second. Let me get the level right. So it's right here on August 12th. $419.99. You can see there's strong resistance at $419.39. So here's what you need to know. We're going to be targeting put options at the higher gaps. The higher gaps are at 415.51. If you want to play it safe, you risk slightly above 416.30, right? If you want to risk more, then you risk 417.60. I wouldn't risk more than 416.30 on that, right? So if it breaks above 416.30, then I would suggest to wait to buy put options at $419.99. There's this gap at $419.99, and there's major resistance at $419.96, as you can see with big downside potential. So write all that down. Now, in terms of call options, your best level for calls is going to be the oversold gap at 404, right? So write down those levels. And if you see, so this is a great confirmation right here, take a look at this. SPY is at major resistance at $418. So if you see a stock at major resistance, or if it's filling a gap at major resistance, check this out. You had gaps to fill on SPY right here towards 415, key major resistance, big downside potential, right? If you see bearish confirmations on the daily, bearish red candlestick, bearish trend reversal candlestick, bearish red candlestick, or even the best, the gravestone doji, the bearish doji at key resistance at the gap, swing trade puts. This was an obvious confirmation to swing trade puts. Big shout out to Top G, who ended up swing trading. I believe he swing traded $200,000 worth of October 15th. It was like mid-October puts. They were fairly cheap. They were only like $1,700 a contract, which is fairly cheap going 175 days out. He held those and he made a killing swing trading those. Big shout out to him for recognizing, we're at major resistance. There's a bearish doji on the daily chart, swing trade. And you could do the inverse. You could do it with calls too. If you see a bullish candlestick at 404, so remember, these daily candles don't actually close and shape themselves until it's not confirmed and determined until the close. So you got to enter your swing trades when it looks bullish at the key oversold bottom level, and when it looks bearish at the key level. Look, this is what you got to do, man. Look, bullish doji right here. See the bullish doji at key support at our 404 level, and then it skyrockets. Bearish doji right here at the key resistance. And then it crashes, right? So if you're seeing bullish or bearish daily candles, towards these levels, you see bearish candles towards here, swing trade puts. You see bearish daily candles towards 419, swing trade puts. Write all this down because these are going to play out within time. And these are going to be the trades that get you in the cost of Trader Society before you even pay for Trader Society. Because I know it works. And if you use these levels the right way with confirmations, determining even if it's support, resistance, or bearish or bullish confirmation, you should do fairly well. Day and swing trading them. With day trading, we scalp, we get in and out extremely quickly. But with swing trading, this should give you a better understanding of what to look for as well, right? So you can write all that down for swing trading opportunities. Those are also day trading levels as well. So with day trading, we're looking for, bearish resistance, gravestone dojis. This is a great confirmation for a nice little drop. Look at SPY, man. Every single time today it formed a gravestone doji. Look at this. It started going down. Gravestone doji at resistance, it drops. Gravestone doji at resistance, it drops. Gravestone doji at resistance, it drops. Gravestone, that's not a gravestone. Gravestone doji at resistance, it drops. Gravestone doji at resistance, it drops. You see the benefit of scalping those, and those dojis form on all time frames. They can form on any time frame. 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30 minute, 1 hour. They can form on pretty much any time frame. So pay attention to those, man, because it's phenomenal on how well they work. Gravestone doji right here at resistance. So remember, it has to be at a resistance level, and then you can do it on the call side. Gravestone, Dragonfly doji at support, and then it starts to go up, right? You can do it on the call side. Dragonfly doji right here at support, then it starts to go up, right? So use those confirmations as well. So what I need you to understand is we know our key levels on resistance, 415.50. We're looking at puts. We know 419. If we get stopped out, we're going to hit puts again at 419.99. And we can swing trade at those levels if there's a bearish confirmation like there was on Monday, bearish confirmation on the daily, right? And then for calls, we know to swing trade at 404 if there's bullish confirmation, right? So what you need to understand is right now, we are in the middle, and it's going to be the battle of the gaps. It's going to be the battle of the gaps filling. So what you need to understand is the SPY is in the middle of the channel, and what's going to happen is there's going to be a battle. There's going to be a fight, and that fight is going to be who could fill the gap first. Then, when that gap fills, we should reverse. So if 415.50 fills, we should reverse. And if not, then we're going to cut our loss quick and save our powder for 419.99. No holding hopes. If 404 fills first, then we hit calls. Tight stop at 403, right? But right now we're in a battle. So what you need to understand is there's going to be some flip-flops. There's going to be some chops, but it's going to be fighting. Think about it as like a magnet. It's going to try to gravitate towards one direction at first. It might be a little bit of choppy battle of some up and down, but overall, it's going to try to be a magnet to one of the gaps. So it's going to try to go bearish to 404, or it's going to try to go bullish to 415.51. And what we're going to use to determine, one of the things we're going to use is our key level, 410.84. If it breaks out nicely, pulls back down, buy the dip, reacts to support, tight stop loss. If it breaks down nicely, shoots back up, short the resistance, 410.84, tight stop towards 411s, right? So that's some one tips. Instead of just trying to figure out if it's going to go up or down here, you could wait for it to break out, or you could wait for it to break down. Then when it retests that level, play the reversal. If it breaks above 410.84, wait for it to drop back down to 410.84, 411, buy the dip. Tight stop. It already broke out, so it should try to attempt to be bullish. Doesn't mean it's going to work, though. You can use other confirmations as, well, is this actually holding, forming support, whatever indicators you want to stack on that, right? If it breaks below 410.84, you miss out on initial move. It starts cracking. Wait for it to spike back up. Short the spike. It already broke back down, right? So those are some things you could do with retest, right? So that's one tip I can give you. But basically, what you're looking to do is you're looking to determine if they're forming a floor, a support level at 410.84, or a resistance, a bearish roof at 410.84. And that will help lead you the direction to gravitating towards the gap. And you can use indicators for that. You can use the 1 minute and 5 minute. I would use the 1 minute and 5 minute for that. You can also use 30-minute candles. You can also use the trick of missing out first, let it break out first, then buy the retest. Let it break down first, then short the retest, right? So there's some tips and tricks you can do, right? It all depends on how you want to play it and your style of trading. So that's what I can say, man. If it reacts as a roof, it's going to try to fill the gap below. If it reacts as a floor, it's going to try to break above and fill the gap. Then whichever gap fills first, it should try to reverse to fill the next gap. So if we go to 404 first, it should try to reverse and then shoot back up. If we go to 415.50 first, it should try to reverse and then crash back down. The ultimate opportunities for puts would be 415.50 and 419. Wait to trade the best setups at the best prices. So you just need to understand in terms of the market conditions we're in. We're in the middle of a channel and there's a magnet. There's a magnet at the gaps. There's a magnet at 415.51. There's a gap in the middle, which is going to help determine which gap fills first. And then there's a magnet at 404. And you don't even have to trade the middle. You can just say, you know what? I'm going to wait for the gap to fill, whether it's 415.50, play puts, or 404, play calls. And I'm just going to play the reversal. And if I get stopped out on puts, I hit it at 419.99. If I get stopped out on calls, let's see. If you were to get stopped out on calls at 404, what would be the next levels to hit calls? Let's see. So the next level, so 403.70. 403.70 to 404, that's your call zone, right? You hit calls there. If you get stopped out, your next level is 401.35. If you get stopped out there, then this is your go extremely heavy level. You can write this one down for the future as well. And remember, you could swing trade at these levels if there's bullish or bearish confirmations. Bullish confirmations at lower levels, you swing trade. Bearish confirmations at higher levels, you swing trade, right? But you have to wait for the daily candle to shape itself. So this is a swing trading strategy I'm giving you, but the candle has to appear either bullish or bearish. If it does not appear bullish or bearish, if there's no strong confirmation right before the market closes, you do not swing trade. And the best confirmations are these trend reversal candles. Bearish doji here at resistance, bullish doji here at support. There you go. See, bullish doji, it spikes. Bullish doji, it spikes. Bullish doji, it spikes. Research some candlesticks, man. Educate yourself. Because with this swing trading strategy that I'm giving you, it's absolutely phenomenal. You wait for the market to close, and if it appears the bullish or bearish or trend reversal candlestick, you swing trade only at the key levels, not in the middle, the key resistance, the key support, in the gaps, the gap levels, right? So yeah, this would be another phenomenal level for the micro, 395.60. You cannot go wrong. If we ever went that low, 395.60, I would likely just swing calls with a bearish confirmation. But again, there's consequences for not using confirmations. But I like the price. So yeah, those are the main things that I wanted to break down. Now, what we're going to quickly do, you do this with a 5 minute, you could do this with a 30 minute, you can also look at 1 minute wicks. I love looking at wicks when doing this. We're gonna create a quick price level sheet. So basically, these levels that I'm gonna call out, you can write this down. And basically, if the level reacts as a floor, as a support level, it should go up to the next level. If the level reacts as a resistance level, then it should go down to the next level. So I gave you the top 415.50, and if it breaks above that, then we hit puts at 419.99. I gave you the top, I gave you the middle, 410.87, and then I gave you the bottom. 403.70 to 404 gaps, right? So I gave you the best levels. Now, as this is, starting to fill one of the gaps, right? What would be the levels that you would need to be aware of as this is kind of trending around? Now, I'm not saying you should trade at these levels, but you should be aware of these levels. And I only really aim for one profit target. But basically, this is just going to be a quick price action cheat sheet, right? So let's start from the top. 419.90. 417.60. If we go below that, where do we go? 415.50, right? So you can do this with the 5 and 30 minute, right? So 419.90, there's a gap. 417.60, resistance. 415.50, resistance. If we go under 415.50, where do we go? Right around here. $413. We go under 413, where do we go? 412.30. We go under 412.30, where do we go? 411.40. We go under 411.40, where do we go? $410. We go under $410, where do we go? $408.50. We go under 408.50, where do we go? $406.74. We go under 406.74, where do we go? This is special. Write this down. This is another strategy. This is what we call a gap breakdown. So when a stock gaps up, you can take the low of day. This is the opposite of a gap breakout. It's a breakdown. So what I dislike about the strategy is it's not a good entry to short, but if it reacts as a roof, it's going to fill the gap. So it's a special key breakdown. You know how people like shorting support? I don't like shorting support. But if it has a big drop under support and then spikes back up fast, I short the retest of that support instead of trying to initially predict if it's going to crack or not, right? I miss out first. That's how I short support if I short support. I short the retest of that support after it already cracks because then it's confirmed bearish because it cracked. So basically, if you see a drop under this level, that means the SPY is going to start to fill the gap because there's no support. It's held up on thin air. There's no support. Look at this. Extend out. No support, right? So if it drops under this, 406, what is this? 406.74. If it drops under, wait for it to spike back up. Spikes back up. Short the retest or short the lower high when it looks bearish. Ride it back down to fill the gap below. And do not milk that. You can't milk a bad entry. Write that down. You can never milk or hold a bad entry unless you're averaging in slowly, right? So write these things down. In terms of entries where you can hold from, 419.90, you can hold from that. 415.50, you can hold from that if you're going to average in, but use a tight stop at 416.30. 404, you can hold from that. And then 410.87, this is the middle, but even though it's the middle, it's a great level, guys. This is a great level. Yes, we are in the middle, but if you're a professional and you can determine if it's bullish or bearish, it's a great level because at this 411 level, it's going to try to gravitate towards one of the gaps. Look, I'm going to show you. This is what it's going to try to do. Look, right here, this level, so what is this? This is $411. Bearish 30-minute, reacts as a resistance, breaks down lower highs, previous support resistance. See how the bottom of this is support, breaks under. Now the top wick is resistance. It sells off all the way down to 404. You see how the major bull trap got created at $411? And then look, it breaks above 411, pulls back to 411. It's likely to be bullish because it already had a massive breakout by the dip at 411. And then look, goes to 417. So that's what you need to understand. It's a make or break bull or bear trap that is going to magnetize and gravitate itself towards one of the gaps. And it is your responsibility to use candlesticks, to read and trade the chart, to use the indicators, whatever works for you at this 411 level, 410.84, if you want to trade it, right? And if you want, you could just miss out first. You can wait for it to break down first. Then when it pops back up, you short it because it already break down. It should be bearish. Wait for it to break out first. When it drops back down, you buy it because it already break out, right? Or you can try to determine it off the bat. Me personally, I like missing out at first, right? And if it doesn't retest, well then, oh well, you miss out on the move, or you could try to look for another confirmation, another pattern. Look at this great pattern. You had a massive gap down, a massive sell-off. You know when stocks gap down, I like avoiding puts. As soon as we had that first bullish trend reversal 30-minute on the chart, nothing but a straight uptrend. You see that confirmation? You need to be focused on these 30-minute patterns, right? You don't want to be focused on buying calls into big red 30-minute. You don't want to be focused on buying puts into big green 30-minute, especially if it's dropping from major resistance or if it's pumping from major support. That's how traps get created. The price matters, the patterns matter, the 30-minute patterns matter. Use all this to your advantage, folks. That is how you trade the best setups at the best prices. If you want to trade live with us, heading into, with us every single day, trade live with my team and I, Trader Society. We have phenomenal traders within the chat. I just met up with them in New York City. We have Dimitri, we have Top G, we have Mohammed, we have Jim C. We have a phenomenal team, man. If you want to be a part of the team, surround yourself with the right community of day traders, scalpers, swing traders. This is the right place for you. It is the first link in the description. It's a one-time fee, lifetime access. You get access to the Discord server, to the traders within the chat. We have millionaires within the chat. Dimitri, we have plenty of successful traders who are killing it every single week. And if you want to surround yourself with those people, it's the first link down below in the description. You also get access to the live trading streams, live trading voice. You also get access to the video lesson library in the course. It is all explained in the first link down below. With that being said, I'm going to be signing off, guys. Thank you so much for tuning in. I'm looking forward to trading this phenomenal, crazy week ahead. We are setting up for some great plays, and I'm looking forward to this.